Hello, welcome again to Times Square, NASDAQ Market Site. I'm Evan Harvey, and this is another episode of our NASDAQ Sustainability Series. We have just done an opening bell with Mindy Lubber, the CEO and President of Ceres. Very nice of you to join us here.
It's terrific to be here.
In addition to all the great work that NASDAQ and Ceres has done over the years that we could talk about, I want to talk about your engagement with the business community and the investor community in general. And I really want to start with how you've seen attitudes and strategy shift over the last 30 years. You've been at Ceres since 2002 or 3, somewhere in there. So you've obviously seen a lot of change. How has the engagement strategy of Ceres with investors changed, and how have you seen investor attitudes change over the last generation or so?
Great, and it's a great question because it has changed a lot. We work with some of the largest companies, Fortune 500 companies, and with about 150 investors on a regular basis at Ceres to integrate sustainability literally from the boardroom all the way through to their supply chain. And I will tell you that 15 years ago, going to a senior executive at a Fortune 500 company or a major investment firm and say, you've really got to look at the economics of water shortages, of climate change and human rights. There was a little bit of the eye roll still. You know, that sounds nice, go talk to our foundation and we'll give some money to some nice charity. And the key, clear message was this is not about philanthropy. Philanthropy is terrific, but these things have real financial value and we've got to build them into what companies and investors in our markets, as you know here at NASDAQ, do. They're not side issues, they're real issues. 15 years ago, as I said, a little bit of an eye roll. 10 years ago, at least an interest in what should we do and how should we do it. 5 years ago, more staff being put in place at investment firms and large companies.
We need to do something, we just don't know how to do it.
Correct. And we work then with companies and investors on what to do and how to do it. And where we are today, Evan, I would say is no eye rolling, a clear understanding that acting on climate change and human rights abuses are real financial market issues. But I'd say we're still moving at a pace way too slow and not at the scale that we need.
And it's interesting, there's also been a shift in the intangible valuation of companies too. So if you consider this part of the 80% of a company's value that is not traditionally measured in a financial report or a filing, it's even perhaps more important to companies than it used to be 15 or 20 years ago.
Right, look, companies know, one, their employees, they're all looking to compete for the best and the brightest. Keeping employees and competing and bringing on the best, they want to work for a company with a mission who's addressing key issues. If you think about shareholders, many of our members, they see sustainability, they see acting on climate change as something that shows whether a company is well managed or not well managed. They see it as a real duty of a company to act because of the risk if you're an insurance company, an agriculture company, a fossil fuel company. So companies know that their shareholders care, their consumers care, their employees care, and they're moving to act because it makes sense. It makes sense from a financial perspective.
And some of these headline-grabbing reports that have come out this year, the IPCC report and the climate assessment from the U.S., does that help or hinder your work? Is that a platform for you to have a conversation with companies about how they could be contributing to a low-carbon economy? Or is that somehow, does it turn the conversation in a different direction?
I would say unquestionably it helps.
Okay.
So smart, thoughtful business leaders, financial leaders, they're looking at the facts. They do look at facts, of course. That's how they've got to be where they are. The facts could not be more compelling from a scientific perspective around climate change, the two reports that you say, what it's going to mean to our future starting now, not starting 10 years from now. The forest fires in California, the storms last year in Houston, certainly in New York, Hurricane Sandy. So companies know they need to do something. The science is real. One of the other recent reports that just came out, though, says not only is this an existential scientific threat to us, but an economic threat as well.
Certainly.
That every sector of our economy will be hindered if we don't act on climate. So let's get started. We need to do more, and I think those reports give us the data, the science, the compelling arguments for doing more.
And you talked a little bit about the evolution in the management mindset as sustainability and ESG practice being evidence of a well-run company. Do you see like the rise in data-driven performance indicators? You know, looking at signals that are rooted in data, and the ESG movement as entirely related? There is sort of this coming to consciousness of this crisis that we're going through, but also there's this change in management style where we're looking at data signals to measure performance and look at things like long-term valuation. these two things linked, or are these two things
They're
concurrent?
absolutely linked. We're seeing studies that show companies that are well managed from a sustainability perspective are doing better, have a lower price on borrowing, on the cost of credit. It's making a difference in real financial ways. And the data that drives it, I mean, you can't act without good, smart data and information. And the data now is available. It's real. It's not perfect. But we know when a company is bringing down their carbon footprint, or if they're at risk because they use a lot of water in the part of the world where there's not enough water. These are grave financial risks. And, one other point. We have to get to a point where ESG or climate or water, environmental, social, and governance issues are like any other risk and opportunity to the economy. That we look at them like if you're looking at trade risk and credit risk, you look at climate risk, because if you're a company in any one of a dozen sectors, there's going to be a monumental impact. It should just be part of the norm, and that's where we got to go.
Let's talk a little bit about the company investor dynamic. I work with a lot of listed companies, and what I hear from them all the time is the burden of proof is entirely on us. We are forced to prove our transparency and our responsibility when it comes to ESG. How can investors better demonstrate their commitment to ESG principles? I mean, we know about the PRI and other sort of very prominent pledges, but is there any way that an investor can demonstrate their commitment to driving more sustainable capital into the market?
Right. So I'll give you two answers. One is investors do need to be transparent, the same way they're asking companies to. So the transparency of what stock exchanges ask, like NASDAQ, what rating agencies ask, and so on, that data is important, and it is largely being asked of companies. Investors need to disclose more information as well, how they're looking at climate risk, water risk, how they're examining it. And that is key, because you can't make smart decisions without good data. Right. But investors are also showing their interest by engaging with companies. We have 320 investors with assets of $30 trillion under management, global investors who are saying to the 100 largest emitters of greenhouse gas emission, the key cause of climate change, we want you to act. And those investors are calling on the companies who they invest in their portfolios, to urge them to bring their carbon footprint down, to look at their transparency and disclosure, and to measure and manage these things at a board level.
Let's talk a little bit about investment strategies. So for years there was a prevailing attitude about divesting away from companies that are fossil underperformers or sin stocks and things like that. Is that still a legitimate strategy for investors to use, or is there more of a movement now to stay as a holder and actually try to drive the company into better behavior?
My answer to that is there's no perfect way to make change. Having been in the change movement, whatever that might mean, but trying to make change for 36, 37 years of my career. It comes in all kinds of forms. It comes through litigation, it comes through negotiation, it comes through lobbying, through being in public office. For those who are making the case that only divestment or only engagement is the perfect answer, that's not the way change happens. You've got to go at it in many ways. There are many investors who are saying coal is no longer a good investment, so they're getting out of it. That's their choice. They're making smart economic decisions, and if that's where the economics takes them, that's where they should go. For those that still hold coal or fossil fuels, using that power, the power of investment, to engage with the companies and get them to change their practices has been an extremely essential and effective tool. So there is no either or, from my perspective. We've got to be looking at the numbers and acting responsibly.
Let's talk about one more strategy that's been in the news a little bit with NASDAQ, so the shareholder proposal process. A useful and vital tool for a lot of investors to be heard in terms of the boardrooms and corporate behavior. Is it still as important a tool for investors driving ESG, a good ESG behavior into companies? Or is it something that needs reform, something that needs to be changed in some way in order to be more effective? What's your opinion?
So my opinion is it is working well and just fine, and it is about the democratization of owners of companies. For those who want to vote their shares, and for shareholders to be able to call the question through the shareholder resolution process, I think it is a highly important, powerful, democratic tool that's working. Look, on climate change as an example. 10 years ago, there were an average of 10 or 12 resolutions. Now there's an average of 150, 175.
And we've crossed some important thresholds in some of them as well.
That's right. 10 years ago, the average vote was 6, 7, 8%. Now it's 38, 39, with many over the last 2 years being over 50%. That tells me that leading investors see this as an important way to tell companies what they think is smart management and good practice. So I not only don't think it's a bad thing, I think the shareholder process is working. I think we see that every day. I think it's working well. And I think there's no argument for changing it that makes sense right now.
Well, those are the end of my scripted questions. I want to go to one more, just
Sure.
while I've got you in the hot seat. We talked a little bit at the Bell about passing this world on to the next generation. What gives you the most hope? Is there anything that gives you a little bit of optimism about the future? We talk all the time about dire climate reports and human rights abuses. Is there anything that you've seen lately that sort of encourages you that maybe either we've turned a corner or we're starting to look at where the corner is?
Right. No, Evan, that's a great question. And we shouldn't only focus, and I shouldn't only focus on the dire consequences. They're there, they're real, but the responses are also there and real. Whether it's thousands of companies that are changing their practices, bringing their carbon footprint down, dealing with their supply chains where they really have a huge impact, changing their practices there, the commitments they're making to science-based targets, targets that say, if we're going to get to the Paris Agreement of less than a 2-degree world, these are the substantial changes. Companies every day are making that. And more investors are looking at what are the real sustainability risks and opportunities, and they're acting on it. What gives me hope is the kind of action I've seen from hundreds and hundreds and hundreds of companies and investors, or the fact that now 1 out of every $4 is being invested in a way that's considering sustainability or ESG issues. We have made extraordinary progress. I'm quite heartened by it, but I'm impatient, and we've got to do more, faster, deeper. I will say one more thing. You are at the epicenter of change, in my judgment. Finance is what decides which way our economy goes. The financial community has an extraordinary opportunity to make change, and we're counting on you.
I couldn't have said it better myself. Very happy to have you here. Happy to finally have a Bell ceremony with Ceres, and happy to celebrate 30 plus years of commitment to these principles. So thanks again for this episode, a sort of a hybrid episode of Behind the Bell and Sustainability Series, and we'll see you again on the next one.
Great. Thank you, Evan.